hottest thing that everybody's talking about in real estate right now is the 50-year mortgage. So Donald Trump came out here earlier and said that he's going to explore what a 50-year mortgage will look like. I have ran the numbers. I know exactly what he is talking about, and I actually made a video about this almost 2 years ago saying that this could be a possibility here in the next few years, and yet here we are. So now if you're looking at moving here to Bellingham, what I want to do first is go over the market report for the month of November. I want to talk about what has happened, and then I will dive deeply into what this 50-year mortgage, whether it's a good idea, bad idea, and who it might be for. So if you're new to the channel, my name is Aldo. I'm a local realtor here in Bellingham with the LeVain Real Estate Team with Windermere, and let's start off here what has happened and essentially what we are seeing in the real estate market here in Bellingham is things are starting to be a lot more stable. We're seeing a lot less dramatic increases and decreases. Of course, we're going into the fall. So now the average sold price here in Bellingham is $806,000, not just in the city of Bellingham. So that's up about 3% from last year at the same point in time. Isn't a big deal. We've seen the couple of months being like this. Last year or last month, we were still in the high 700s. Now it's 806, so we're pretty stable here. Now in Whatcom County, the average sold price is $662,000. Again, up maybe 1 or 2%. Other than that, it's staying pretty firm here. Now, days on market, we did see a dramatic increase last month from the previous month. And in Bellingham, the average days on market is 47 days. 2 months ago, we were seeing about 21 days, so that's the biggest jump that we have seen. Again, it's November of 2025. We're reviewing October of this year to October of last year. Now in Whatcom County, we're seeing that homes are taking longer if you're talking about just the county in general. So for the average days on market in Whatcom County, this does include the Bellingham as well, and the average is about 56 days. Now that's up about 40% from last year. Again, homes 2-3 months ago, they were selling in Bellingham about 21 days, Whatcom County about 30 days. But now if you're in Bellingham, you're about 6 weeks or so, a month and a half. On average, some homes will stay on longer and sell a lot longer, or some will sell a little bit quicker. In Whatcom County itself, when you're looking at Ferndale, Linden, out into the county, almost 2 months on how long a house will sell. So things have changed. Marketing is important. The way you expose your home is obviously very important because things aren't just selling here overnight. Now, we are gonna see that getting extended even more as we're going into the fall, especially into the winter time. And we're also gonna see inventory drop because we're gonna start seeing homes just taking a break, canceling, expiring, whatever the reason may be. Homes will start coming off the market as we get later into the fall, especially after Christmas. Now, the list to sale price ratio, again, how much am I listing my house for and how much are we selling it for? Last month, again, if you guys tuned into that market report, that was the biggest decrease from 100% down to 96%. So now in Bellingham, we're seeing that about 97%. Also in Whatcom County, 97%. So if you're selling your house for $1 million, you're probably gonna get about $970,000 or so on average. Again, that's average. So homes still could sell for more, or homes can sell for less. So we're probably seeing anywhere between 3 to 5% that sellers are actually decreasing the price or selling below an actual listing price. So now as we move on into inventory, we are still seeing that inventory is rather high, especially compared to last year. We're seeing here in Bellingham about 296 homes available. That's up 60% from last year. Again, the last 4 or 5 months, we're in that 1,000 or so for all of Whatcom County. We're about 1,010 homes available in Whatcom County. That's up 40% from last year. Now, again, we saw the increase back in May and June, a big increase. We're gonna start seeing that tearing down. Like I said, going into the holidays, especially after the holidays, our weather kind of gets crummy. Now, we did see an increase of homes going under contract here this month, and actually the last couple of months. In Bellingham, we've seen 92 homes under contract. That's up 8% from last year. And in Whatcom County, we saw about 240 homes go under contract, and that's also up about 5%. So yes, we're seeing a lot more inventory. Home sales in the last 4 months have been good. We've just seen that much more inventory, so it doesn't seem like we're selling as many houses, but in fact, we're actually putting more homes under contract the last couple of months than we did in this same period last year. So enough of that. Let's get into 50-year mortgages. Now, it's not crazy to me that people are talking about 50-year mortgages because, again, 2 years ago, I made a video saying that this was going to happen. Now, the only thing, in my opinion, and this is my opinion, could be somebody else's, a lot of people think that real estate agents make too much money, so much money. In my opinion, the banks are the ones that always win. They're the ones making all the money. And in this 50-year scenario, if the way I think it's going to go, it's going to be a win for the banks, and it's always going to be that way. Now, I'm hoping it's not, but the only way a 50-year mortgage makes sense, in my opinion, is if we're 1 to 2% lower on a 50-year mortgage than we are on a 30-year. So for example, I did all the math, I have everything, I'm gonna read this to you. So right now it's November 2025, a mortgage is about 6.25% for 30 years. I'm just gonna go off of 6% to make it kind of even. On a $600,000 loan here, and that's based off of our area, right? So just taking an average, if the average home in Bellingham is about 665, 675, then, or in Whatcom County, then you're probably gonna put 10% down on average. You're gonna finance about 600,000. So at 30 years at 6%, just principal and interest, this doesn't include taxes, doesn't include PMI, doesn't include insurance, any of that. Just principal interest, you're about $3,597 a month. At 50-year mortgage, at 4%, you're gonna be about $2,520 a month. This is the only way I see, if 50-year mortgages become a thing, that this will be a good win for the consumer and for the bank. Will this happen? Most likely not, but this is the only way, and I'm gonna explain here just in a minute what most likely will happen and why it won't be a good win for most people. Now, let me keep continuing. So after 10 years, the principal paid on that 30-year at 60%, you're gonna be paying down about $100,000. On that 50-year at 4%, you're about $60,000. At 15 years, the total principal paid, you're about $255,000 on that 30-year. And then at 50 years, after 15 years, your principal paid is about $125,000. So the remaining balance on that 30-year after 15 years is about $345,000. So you're coming from $600,000 to $345,000. On that 50-year at 4%, that remaining balance is at $475,000. As you can see, you will pay down your principal a lot more on that 30-year at a higher rate. Though that 50-year mortgage is going to save you $1,000 a month. And this is where things might be a little bit different for 50 years. I do see people or the banks or whoever putting some strict rules on who can get this 50-year mortgage if they're deciding to do a 1 or 2% below what a 30-year fixed mortgage is going to be. Just like an FHA loan, USDA, they're gonna have some regulations to maybe you can only have a combined income of $140,000, $150,000. That's just an example, right? Your credit score has to be above 680 or 720. You're gonna have to have really a low debt. Maybe your DTI has to be at 40% or 35%. So I think that's gonna have some restrictions. It's not gonna just be for everybody, because if this does happen and it's 1 or 2% lower, the market would go crazy. We will see 2020, 2021 all over again. People are gonna be able to afford anything in every house. But as you can see, the biggest downfall on this is that it's gonna take you a very long time to pay down any of your principal balance on here. So I think this is a really good short-term solution. It's not a long-term solution. If this does happen, and this scenario does happen where we are 2% below, well, the market's gonna go crazy. This is where we're gonna get in trouble. And then homes, when they take that 50-year away, or if they increase the prices of that, we're gonna start seeing people in their houses probably from average about 9 years, probably all the way up to 14 years. And that will screw up the market even worse than what it could be right now with these higher interest rates. So I wanna mention here so let's go back to 30 years at 6%. The full term of 30 years, which is hard to believe that anybody actually does that, because most people refinance. Rates will always come down, always come up. There's gonna be a point where people will refinance. Now you're gonna pay about almost $700,000 in total interest. So $695,500 of interest paid on that 30-year at 6%. At 50 years at 4%, your total interest paid is $911,500, which is crazy. Obviously, people are like, oh, wow, would you ever do 50 years? Well, guess what? Unless you bought at 2.5 or 3%, those people are gonna keep a 30-year loan. They're gonna pay it off or pay it off early. Other people who are in that 6, 7% have already refied and they're not gonna be paying this. Most likely, they're not going to be paying this for 30 years and they're going to refi at some point or another or pay it off early. And this is where I think the short-term benefit of this 50 years is going to happen, because at 30 years at 6%, after 10 years, you're going to have total interest paid is about $331,000. After 15 years is $393,000. Now, look at the 50 years. After 10 years, it's only $242,000. And after 15 years, you're about $326,000. So I think that's why this 50-year would be really good, because in the first 10 or 15 years, you're going to pay less in interest at 4% at 50-year mortgage than you would at a 30-year at a higher rate. So that's where it's gonna be great for a lot of people. Now, again, overall, after 30 years, you're gonna be paying $911,000, which is a lot more, which is about $210,000 more than a 30-year at 6%. For those of you that are looking at buying a house here, I don't know when or if this 50-year mortgage will actually be implemented and what that will look like and who would qualify for it and whatnot. But obviously that's the talk of what everybody is talking about right now, since Trump has explained that he's thinking about doing that. So guys, please, my name is Aldo. I'm here with the LeVain Real Estate Team. If you're looking at moving here to Bellingham or the surrounding area in Whatcom County, reach out to us. We'd love to help you guys out. We have Zoom calls and in-person meetings from people that are 6 months away, a year out. It doesn't matter if you're looking at buying a house and you want more information about our area and what the process is like, let us know. There's so many things that happen in our area that are differently in your local area. And we'd love to meet you guys and get a plan going. So all my information will be down here below. Again, my name's Aldo here with the LeVain Real Estate Team, and we'll see you next time.